In terms of what Jay Powell sought to do, what the markets picked up from what he was saying, which essentially was, we have a sole mandate. It is inflation. It might cause more economic pain than maybe the markets have been pricing, at least the stock market. So get ready. Where is the issue in that? Did he send the correct message?
So he finally sent the correct message. He should have done that months ago. He was unambiguous. He was clear. He stuck to his script, and he did it in 8 minutes. And the market is starting to realize that when your Fed chair mentioned inflation 45 times in 8 minutes, something is changing. That's the good news.
Yeah.
The less good news is he didn't deal with the policy errors of the last 18 months. So you have Jeremy Siegel, for example, coming on and saying, well, what does this mean? He should do that at some point. And he hasn't dealt with the fact that they have a monetary framework that's not fit for purpose. So if he sticks to his script, we should expect more hawkish talk as we go forward. But there are people who doubt that he will. So that's where the ambiguity is, and that's something that the market's going to have to navigate through.
I mean, on some level, it was really a reiteration of where he and other Fed officials have already been for months, right? I mean, they have said they're not looking for a moment to reverse policy toward easing. They have said we still have to have significant tightening moves for the rest of this year. They have said they need multiple months of inflation to come down before they change that story. So why do you think this was lacking if he was essentially just in a more vociferous way saying what they've been already saying?
Because of what he didn't say. So as Joe pointed out earlier, he didn't talk about a softish landing.
Yeah.
He didn't do the pivot that he did at his press conference when suddenly out of the blue, he brings in the notion of neutral, something that Larry Summers called analytically indefensible and inexplicable. So the fact that he stuck to the script made him come across as consistently hawkish, something that hasn't happened in the past.
Although he hasn't had any pain yet, the jobs numbers are still good. Still, people still not convinced we're going to have a recession or that we're in one. It hasn't gotten hard yet for him to stick to his guns. Did you think Jeremy Siegel was dovish? I thought he was dovish. He was saying, don't go crazy.
Yeah.
Don't go crazy, Jay Powell. Be data dependent. And, don't get caught up fighting the battle of the 70s if it's not the battle of the 70s. Are you more hawkish than Jeremy Siegel?
So to be clear, what Jeremy said, or what I heard him say, is we already had one Fed mistake, which is the transitory being very late, et cetera. Now we risked a second Fed mistake of reacting, as you said, battling with the past, not with the future. So that's what he said. He wasn't dovish. He said, on the contrary, we may end up with a too hawkish mistake.
Do you? This is all front and center now for the market. So we're going to have our old discussion now about.
So I want to ask you a question on that. If we were to make the bet today,
well, we can. That's what I was going to ask you too, because we're right back where we started.
Almost.
39.98, but we're just a little bit above.
Correct.
We're down 40 on the S&Ps this morning. That'll put us at about 4,000. So we can both take back our bets. We can cover. We can both cover and say let's just. Neither one of us was right. You won't pay me the tacos. I won't have to take you to a Mets game. Should we do that at 4,000?
So what do you want to do?
I don't know. Do you still think we're going? You might want to cover. Do you think we're going to 3,600 still?
So 3,600 is the number you put out there, and
that's the one. That was the 10% up or 10% down. What comes next?
I worry we go lower before we go higher.
Do we go to 3,600 first, or the bet is 3,600, or
do we go to 4,400? Do we go to 4,400?
You were sweating.
I was ready to declare defeat.
You were.
Yep.
But now I'm ready to cover because I think.
Are you ready to cover?
No, because now I'm looking at the markets today. Hey, do we know everything bad now, Mike?
Well, I think there's a case to be made that the markets were already uncomfortable. The market was already pricing at a certain probability that you'd have a rough patch in the economy. You can't say it's all in the market, of course, but I wonder, Mohamed, I mean, you suggested that Powell's, the entirety of his communication has not necessarily been complete. But, the market, if you look at the market-based inflation expectations, they responded right away to what he had to say. In other words, why should he care if he hasn't yet given a full kind of confession about how they missed signals on the way at this point when the market seems to be coming in line to what he's likely to do next.
So first you have to say which market.
Yeah.
Right? I mean, the 2-year took out the highs of June.
Yeah.
The stocks have not taken out the lows.
Sure.
Right? We all talked about disconnects between bonds and stocks, disconnect between the Fed and the market, disconnect between the economy and the markets. All that was a function of communication not being clear. So first of all, the second thing he had to face is that financial conditions loosened significantly at a time when he was trying to tighten financial conditions. So he had to realign expectations.
Yeah.
He had no choice. Now the question is, does he follow through?